What's going on? It's your boy SoFly Trades here, back with another video. And today I'm just here recapping my stock market trades of the day. So today I basically took two trades. My first trade, I was looking for, we were at this 400 level. Uh, I was looking for rejections on this 400. So we rejected it pre-market once. So when market opened, I was looking for a possible, another rejection, you know, back down to 397. But as I got in my puts, I started to see relative strength. So I cut my position for a loss of $81. I could just show you the guys right here. I'm sorry that I'm in the way. I'm so sorry. Let's get out the way. There we go. So as you can see here, my first trade was a loss of $81. And then I said, okay, I had to reset. I said, okay, let me just wait for price action. I also had another key level up here, this 40101. So I wanted to see price action around this key level here. And I started to see that we were distributing up here near this level, and then we started to reject this level. So if I go here on my 1 minute time frame, I could show you where I got into this trade. Okay. So on my 1 minute time frame right here, I got into this trade right as we crossed this trend line. I only bought one contract, you know, because I was hedging my way in. So what I wanted to do, I bought one contract right here. Seen we started bouncing, and I decided to buy two more contracts right here once we crossed this 21-day EMA. And, I was just waiting with my stop loss right above here, the previous high. And I seen we started coming up, I was getting a little bit nervous. I'm not going to lie. I was getting a little bit nervous because I seen we just was holding this level, and I just thought we were just going to, shoot up. But, I had conviction in my trade. I had my stop loss set. So, I held through it. And then I added my last position after we crossed the 21-day EMA again. And then I took that one all the way down. So on our 5 minute, it would be better for you guys to see it this way. Okay, so I basically got in my full position over here. And I took that position down all the way to right here to 399. So my contracts went from about, give me 1 second, 740. So my contracts went from $80 to 186. So if you spent $80 on one contract, you made 186 off of it. And I had four contracts. And once we got down to this 399 key level, my 61.8% fib, I seen, I wanted to sell at this key level because the 61.8% fibs usually hold a lot of weight. So I didn't want to take the chance of the price going against me. So I just wanted to take my profits, because you have to remember that even if you're in profits, they're really not your profits until you close your positions. You could be up 500, and then the next 5 minutes you're down 500. So you want to take your profits, at your key levels. And if, you think the market is looking weak, then, you have to manage your risks, adjust your stop loss, or, hold one runner, or however many runners you're comfortable holding, but you still have to have that stop loss set. And if I was to hold a runner, I would have had my stop loss, let's say I'd have held it right around, VWAP, above VWAP, and above this 21-day EMA right here, because that's two barriers that would have to go past, to signal to me that we're super bearish, if we broke past these. So on that trade, I made a total of 285 with an $81 loss. So in total today, I made $204 for about 20 minutes worth of work. And my contracts were like $336, and I made $204 off of, I made $285 off of $336. So that's pretty good. That's a pretty good risk to reward ratio. That's like a 1 to It's like a 1-to-2 risk to reward ratio. 1-to-2, 1-to-2.5 risk to reward ratio. That's what you want. You always want your risk to be less than your reward. Basically saying you don't want to take calls at resistance and you don't want to take puts at support. Basically, you would like, if you wanted to take a call, you know, if I was looking for calls, basically, I would want it to break above this with volume, with momentum, a nice candlestick size, and then a retracement back to this key level to bounce off of it to go back up. That's what I'd have been looking for calls. But other than that, you know, today wasn't that bad, you know. Oh, another thing, I broke one of my rules today. I told myself that, you know, I'm going to wait, you know, after market opens, I want to wait till 7 a.m. to trade because I'm on Pacific Standard Time in California, because all the big institutions, they usually wait the first 30 minutes of the market, you know, to, you know, feel market sentiment, see, you know, how the market is feeling in order for them to get in their positions. And what do you know, when I took a position before the first 30 minutes, instead of waiting till 7 o'clock, it went against me. So what I'm going to write down is, if I do take a position before 7 a.m., it has to be a small scalp. You know, I can't hold it because markets usually always reverse around 7 a.m. Pacific Standard Time or 10 a.m. Eastern Standard Time. So you want to really be on the watch for that. You know, you don't want to get caught in a weak position. But, you know, other than that, I just wanted to share you my trade from today. As you can see, February 27th, it's now 12:02. You know, this is a real account. Not bullshitting you. But yeah, I appreciate you guys for tuning in. And I'll see you guys tomorrow. Peace.